Welcome to Around the Blockchain. Today's going to be a great episode. We're talking about staking. Yes, the SEC coming after staking, and we got some things pumping, we got some things dumping, and we got some hot takes. It's going to be a great show. We're going to go ahead and get right into it. On the top right, I don't know who we have on the top right. Who's it going to be? Is it Debate Crypto? Debate Crypto, how are you doing today? You got the green screen. Are you feeling green even though we're in the red?
Always, baby. Always green on Bitcoin. Nothing but up.
All right. And then also we have Sin City Crypto, this time not from the set. Are we getting one of those rare glimpses into your home?
This is looking to my loft. Is every time I come on the show, I'm gonna be in a different room in my house.
Okay. I can't wait for the bathroom episode. And then just on his channel, Rice TVx, I highly implore everybody, make sure you go to his channel, look up, I think it was 2 videos ago, Rice? Oh, you're muted.
Yeah, we did it. We did a live stream yesterday, and then the day before that, I had Bitcoin Ben on the show.
All right, yeah. So definitely check that out. I give some hot takes. I talk about the market. I talk about some predictions and talk about where we're going and where I came from. But let's talk about the SEC.
It was a great one, man.
I thought it was really good. But let's talk about the SEC coming after staking. It kind of started with Brian Armstrong, no, not Ben's uncle, CEO of Coinbase, and he tweeted yesterday that there is a rumor that the SEC might ban staking for retail investors. Armstrong is, quote, "I hope that's not the case, as I believe it would be a terrible path for U.S. if that was allowed to happen." Well, let's just get right into it. Rice, there have been people who have been wrecked from these centralized staking platforms. Would it be bad? Would it be detrimental to America if they were to remove that ability for Americans to stake their crypto?
For retail investors, yes. And obviously, it looks like they're just trying to screw the little guy. The SEC is supposed to be protecting and looking out for the people, but we obviously see what the SEC is doing. And, this is pretty much a good summarization of what our government's all about, unfortunately. I don't know if it was if I was supposed to just give you a short answer there, if I was supposed to expand, or what the deal was.
No, but I want to ask, maybe further along, is there going to be, we saw what happened with Kraken and Jesse Powell. We'll talk about that in a second. But with Coinbase, I remember they lowered their DAI rewards. I can't remember what it was, but, it reduced significantly, somewhere in the order of like 95%. So this is clearly something that they are thinking about. 5 years from now, will we be able to get like a 1% yield on these staking platforms or on these centralized exchanges? Or are they going to even take that away from us?
It's probably going to be absolutely zero, and they'll take it away from us because they're going to be having their CBDCs launched by then. We're talking 5 years out. The CBDCs are coming this year, in my opinion, and they're going to be offering incentivizations for people to stake their CBDCs if that might be the case. But no, cryptocurrency as a whole, looking at like the decentralized cryptocurrencies, especially something using Bitcoin as an example, is a threat to the governments, and the governments realize that. And that's why it looks like with what is going on, especially with all the articles we're going to be talking about, this is just a systematic attack on crypto to make crypto look bad. And FTX, I think, was a big part of that as well. It was Hillary Clinton who said in a conference in something, I think it was World Economic Forum related, talking about cryptocurrencies undermining currencies, undermining the role of the US dollar as the world reserve currency, and destabilizing nations. Governments realize the threat that cryptocurrency brings to the table.
Mm-hmm. Yeah, and it seems like the threat of losing staking has also done a lot of detriment to the price action we've seen. Now, Crypto. Or go
real
ahead.
Quick though, let me add staking when you're dealing with stable coins, which are kind of a representation of the dollar, and they're offering higher yields on staking with stable coins in particular. That is a direct threat to the treasury bond market. And right now, with everything going on, the treasury bonds are kind of the lifeblood of what of how we continue to do debt in this nation and borrow into the future. So anything that has been a threat, and again, that's why before Celsius went insolvent, there were different states going after Celsius for this very reason. It was a conversation we've had before on the show.
All right. Well, before I talk about Bitcoin's price action debate, Sin City Crypto, what do you think of that assessment that, I agree. I think it might be a huge threat to the bond market with staking. Can you just kind of unpack that for people maybe not quite understand what we're saying with in regards to the bond market and staking competing with that?
Yeah, well, the way you generate, you raise funds, you fund programs, you bring in money on a country level is by issuing bonds, and then that in turn, if you're staking, is a direct competition, as Rice has said, and you know you have institute. So let's not muddy the waters. Institution wants to make money where they can make money, and so if a company can generate revenue by offering crypto products, they're going to do so. However, institutions that their business model is built off of banking, that is going to be something where they're going to try to push back. So the central banks, the traditional retail banks, they don't want you to leave the traditional fiat system. They want you to stay in. Bank of America is offering 0.01% interest rate on your savings account. And so if you can get 2% on a USD stable coin, then why not do so? It's no surprise to me. And if anything, they're using the Celsius collapse, they're using the Gemini collapse as ammunition for say, hey, we're going to get rid of this. However, their only thing they're doing is trying to look out for themselves and in the business model that we have. Because right now, crypto is attacking what the governments are doing as far as printing, as far as being irresponsible with money. And there is a solution to this. You can unplug from the system and you can do it by transacting and interacting with crypto. You mentioned Brian Armstrong. He blew the horn on this not only yesterday, but also like 6 months ago. He said that the SEC had threatened to lawsuit and to sue if they were to pursue staking and yield and borrowing in the same way that you have kind of Aave, but more in a centralized form. Something that's already in our industry. They basically stopped them there. And so this is not new. And when they threatened to sue, that was before everything else collapsed. It's also interesting that Brian Armstrong put out that 6-tweet thread, because that might be the last one, by the way, because we just upgraded to 4,000 characters.
Yeah,
For
more
your
words,
tweets
more
now,
words, more words. Yeah,
Mhm.
now being added there. Yeah, and you brought up Coinbase. We actually have a graph for showing Coinbase's staking, just a breakdown by the percentages, everything that they have, and you can see here. This is a lot from Coinbase, and then I want to say it's Lido. I have bad eye. It's boomer eyes, everybody. I'm just going
Well, the
off of
stock also
memory
the
here.
stock price of the coin stock is going down too, based off this news. What happened with not only Brian Armstrong's tweet, but also what happened with Kraken and the
Yeah,
SEC.
and DeFi coins getting hit tremendously. Yeah, we'll talk about Jesse Powell and Kraken and everything real quick. Debate crypto. I want to ask you about Bitcoin's price. I'm pulling up the chart here. Huge dump after this announcement from the SEC regarding Kraken and their fine there. And you just see the massive leg down. If we go to the 7-day, even then it almost kind of looks worse in a way. And if we go to the 30-day, doesn't really look that bad once you zoom out, though. So debate crypto, a lot of people getting fearful. I'm seeing the bears coming out of the woodwork saying, I told you so. I told you we're going lower. Are you feeling as confident that, maybe this upward momentum is no longer valid? Because, the money flows on the way down. There's a lot of traders turning bearish.
Yeah, so I definitely think that the bottom has been in, right? So whether we head lower right now or not, I don't think we're going to get any lower than what we already saw was
definitely.
Like
Now, not to cut you off, you said definitely. I'm barely above 50% that, 15 and change was our low. Where are you at on the percent? Are you 99% sure? Are you 80%?
I'm pretty close. I'm in the 90s percentile because there was a macro regression trend, downward regression trend since October of 21 that we were in that was respected heavily every time we hit the upper bands and lower bands of that regression trend all throughout 21, 22. And now we have finally broken that macro trend. We've also which led into a double bottom, and this is all in the daily chart. So that has led me to believe that there is no way that there's anything that can happen unless we're talking about some, nuclear war or some massive black swan event in the traditional market that would lead us there. But it would have to be something massive, like I said, like nuclear war situation. Nothing else in the crypto space is going to push us down. This just happens to align at the same time, right? We pumped massively We were having green day after green day after green day. It was only a matter of time before we saw the cool off for Bitcoin. And now it just happens that it coordinated with this news. Now everybody's pointing the finger at this news was taking Bitcoin down. Well, no, we've been pumping massively in last month, right? In January, I think Bitcoin was up 40%. So now that we're dropping down to 21,000, just because there's some bad news right now, that doesn't mean that that is the major cause and that, we're headed to new lower lows.
All right. And I do want to share real quick today's episode brought to you by bcvault.com and presyn.io. Make sure you check those out. Links are in the description. Those are the links to the channels below us. But let's talk about Jesse Powell. I actually have his remarks. This is a tweet that a little encapsulation of what has happened recently. SEC, let me zoom in a little bit for those at home with eyeballs like Deezy's. SEC announces settlement with Kraken. Kraken agrees to stop offering staking as a service. Kraken will then pay a $30 million fine. None of the money will go to restitution because there aren't actually any victims. The SEC war on crypto just getting started. Then it links to the SEC news brief. Of course, they didn't, Jerome or, Gensler had to do his little video as well. But Jesse Powell, this is the CEO and co-founder of Kraken. He had a response. Applies to U.S. accounts only. Staking continues as usual outside of the U.S. Majority of clients are not affected. Now, Rice TVx, is this the end of staking for U.S. customers across all exchanges?
I wouldn't say the end. I mean, there's going to be a revision to how this is going to be done, obviously. But it may possibly be the end. I mean, there is a possible attack that they're going to stop retail investors from utilizing staking as a service as much as possible. But now, to clarify the bond stuff, the treasury bonds earn a certain amount of yield depending on which year you decide to buy the bond in. When the staking of stable coins, which are equal to the dollar, are offering higher yield returns, that is a threat to the bond market. And the bond market, again, is the lifeblood of everything. Just kind of clarify that a little bit. This is interesting. Now, what I didn't get from one of the articles looking at this was this filed last Thursday? When did this whole entire investigation start for there to be a settlement?
I think a lot of it was behind closed doors. I actually have a tweet from the U.S. SEC right here, and it says today we charge. So I'm assuming the today was the official charging, but yeah, you don't just have $30 million to your point. So clearly there's back channel. Yeah, there's clearly some.
That's 100% why Brian Armstrong was aware, because obviously they're offering something very similar. So maybe it's very possible that the SEC is communicating with Coinbase in regards to the same thing,
or even a Kraken insider.
We definitely need to be paying attention to what's happening. And again, this just goes back to reiterating why we need to get involved in the political game, why we need to make our voices be heard amongst our politicians, our constituents, the people that are supposed to be representing us in Senate and Congress. We need to make our voices be heard. People need to pay attention to what Ben Armstrong is talking about with the legislation. I know that he's trying to introduce legislation. He's got a bill that's being sponsored that he's going to be able to share more information on. We need more positive legislation for this industry here in the United States, or otherwise my advice would be move out of this country.
Yeah, no, good advice there. Now, Sin City Crypto, is this going to be the end of non-custodial staking? There's other ways of staking. For instance, I was looking at my Cardano wallet today. I know the Cardano shell, it goes again. But it is non-custodial. It's just I stake through my wallet. There is no KYC. It's just a wallet that I downloaded on a Chrome browser. I mean, should now be the time where everyone start withdrawing all their staking rewards? I mean, is there a worry about something maybe potentially being frozen up, even if it's overseas?
This today marks a pivotal change in how we are going to interact with staking and how we're going to earn passive income if you don't want to buy and sell. What we know is staking on exchanges is going to slowly fade out, at least here in the U.S. with U.S.-based exchanges. Internationally, not going to be affected. So you could theoretically circumvent it with the use of a VPN. I am curious, though. I think I would not be surprised if we don't get a way that the exchanges circumvent or still offer staking without directly being on their platform. We have the Coinbase wallet as an example. So you can buy and purchase NFTs, keep it on the wallet. It has nothing to do with Coinbase itself. And so what is to stop you from moving your assets to a Coinbase wallet or a Kraken wallet, and then from there staking on an external platform without ever having to go physically on chain, even though you kind of are physically on chain, but you're still doing it in the comfort of the platform. I think that circumvents what the SEC is trying to go after. And then with with this whole like the Gary Gensler thing, man, it's just such an overreach. Like I don't think we've kind of addressed at it. I think they just had such a bad look when it came to the collapse of Celsius, also FTX, and then of course you had Gemini. Yeah, they're using it as an excuse, but I think their image got tarnished because you heard politicians standing up and asking for accountability and saying, hey, you're supposed to be regulating this industry, yet you're not doing anything. So I think that it's an overreaction, the same way that we see the Fed overreacting when it comes to tightening and loosening the federal interest rate. I think we got the same thing here when it comes to the SEC and what they're doing. I'm just a little fearful of what the next step is going to be for the SEC. I'm a little fearful of what the staking is going to look like in the future as well. Because remember, the degens here, they don't want to learn how to stake on chain, even though it is simple for us. But you're somebody that's a server at a restaurant or an auto mechanic, and they have a family at night. They don't, they might not be interested in learning how to properly stake on chain. I'm glad you mentioned Cardano because they do make it pretty easy. And one last thing, Charles Hoskinson did throw some shade at the Ethereum blockchain on this whole subject as well when it comes to staking. Charles Hoskinson came out and said that he likened Ethereum staking to more likened to securities. And and I think he was saying that because of the way the proof of stake works with slashing and how you have voting power and how you have a centralization of voting power.
I'm about to market buy ETH Classic and ETH Proof of Work right now. I think that's a good point.
I'm surprised those aren't pumping, man. I really am.
We have to accumulate. Well, debate crypto. Is there something there? Is this bad news for ETH 2.0 and is potentially a bullish case scenario for ETH Proof of Work, ETH Classic?
Well, it's definitely going to be a bullish thing for proof of work blockchains, right? It's a narrative that the Bitcoin maxis have been talking about for a long time, right? The centralization that comes with proof of stake, and Ethereum is a good example of this, right? If more examples led to Cardano-like staking, where it's non-custodial, this wouldn't be such a problem. We're definitely going to have to see a pivot in that direction. So proof of work, I don't think that ETH proof of work is going to massively, become the next big thing. Would it have a pump? Obviously, it could definitely happen, right? The degens will just jump in and start pumping the ETH proof of work. But long term, I don't think it's going to have a sustainable direction. I think we're just going to have to pivot on how, Robin from Sin City was saying, how we see staking in Ethereum right now. The biggest problem is that these centralized exchanges are the problem, right? Because they're the choke point. They're the easy targets for these regulations to hit. If we focus, which makes a good positive narrative for decentralization, is that we move away from these centralized entities doing all those services for us, and we focus more on decentralized services that can do the same kind of concepts, being non-custodial, which also helps, with not losing your funds and be more decentralized. So indirectly, the government right now is pushing for decentralization and showing the example of why decentralization is important and how these centralized entities cannot protect you. They won't have your best interest, and they will fold every single time they get pushed on any narrative that is not convenient to the government, right? Because we're experiencing the greatest transfer of wealth right now, and the government knows this is happening. They know that capital is fleeing the dollar into crypto assets, and they want to stop that in any way possible. And whatever choke point they can get their hands on, whether it's staking or anything else, they're gonna make a push for it. Is it a battle that they will lose eventually? Yes, but they will drag this battle out as long as possible. They're not gonna let you get financial freedom without a fight. It's gonna be a fight the whole way. And anybody that thinks you're gonna receive financial freedom in the crypto world without a fight from the government, you haven't been paying attention.
Yeah, and on that note, Jeremy Hogan has a great tweet summing up, the difference in what we're trying to do and what the traditional systems have. Kraken offers up to 20% on stake tokens. Bank of America offers 0.0001% in a paperclip. Of course, the SEC would shut it down. And we brought up Charles Hoskinson, of course, famously was, helped develop Ethereum, had a falling out, when they forked from Ethereum and Ethereum Classic here. And Ethereum Classic, hey, I was wondering, hey, maybe it is a bullish case scenario for them. They're actually down 6.5% almost. They're down to $21.
Now, Charles is a little bit biased here, though. Let's be real. I mean,
Yeah,
he's a little bit biased.
A little bit. It's almost like the ETH people are biased about Cardano. It's funny how that goes both ways. But yeah, still a $3 billion market cap for ETH Classic. I guess those Robinhood buy orders just kind of pumped that thing up. But Nick Carter also had some hot takes on it, famous Bitcoin maxi. He's alleging that the U.S. government is using the banking sector to execute a widespread crackdown. His quote, specifically, the Biden administration is now executing what appears to be a coordinated plan that spans multiple agencies to discourage banks from dealing with crypto firms. Rice, does this sound like they're starting to gear up to ban the fiat on and off ramps to you?
It's a good question. I know that we have the CBDCs coming, so this is very well possible. I mean, the Biden administration has not been exactly pro-crypto with things. I want to add also that the gray area with regulation from the SEC, I think, is on purpose because it allows for them opportunities to say, we've kind of caught you in something because there is no clarification in anything. It's interesting that there was this attack on proof of work and energy, and now there's possibly going to be a ban for retail staking, which was supposed to be the answer to the proof of work problem. And I think that a lot of these OG crypto exchanges are being kind of pushed out and limiting what they can and cannot do to make way for more of these traditional existing companies to get involved. Maybe we could see a JP Morgan exchange that may offer a better yield on return for staking because they're already in that club. Not everybody in the cryptocurrency industry and exchange industry is pro-government. A lot of these entities have to work with the government, unfortunately. I don't know if my mic just went out.
No, we can still hear you.
Okay, something really weird went in my ear. So,
It's
anyways,
SEC.
yeah, it's the SEC in my ear. But man, it's just what's going on is obviously, like I said earlier, it's a systematic attack on cryptocurrency. And they want to introduce the CBDCs. FedNow is going to be launching between May and July. And I feel like there's going to be something taking place that's going to encourage people. And it's not going to be a good event that's going to encourage and usher people into using the CBDCs.
All right. Well, speaking about CBDCs, Debate Crypto, how long do you think it'd be, assuming CBDCs do get rolled out, maybe it's going to be, hey, every American gets 300 for free. Check your wallet, download here, go to the .gov. Assuming that happens, how long do you think it'll be before we can use a government-sponsored wallet to change that USDC into Bitcoin? Is that something that may never happen? Is this something maybe 20 years down the line? Is this something day one launch product? What do you think about government-issued USDCs interacting with Bitcoin? Maybe it's wrapped. Maybe, I don't know. Who knows?
Yeah, I think it's going to be a while. I definitely don't think it's going to be the first get-go day one. You're going to be able to convert from CBDC. They're going to try to lock people into the CBDC, right? There's going to be a lot of incentives, not just getting some free CBDCs like, hey, 300 if you download today. I think there's going to be massive tax incentives, right? Maybe everybody that gets paid in CBDCs, they don't have to pay taxes for foreseeable futures, right? And we see kind of a Puerto Rico kind of style implementation put into the U.S. now, where if you're using CBDCs, you're not paying taxes on your income, right? And I think that's going to incentivize a lot of people. So they're going to have all types of goodies for people to join the CBDCs. We saw what they did with the fog around the world and all of their incentives for that. So we're definitely expect that to happen. I think that, and like I said, I don't think they're going to allow you to leave the CBDC into anything else. I think there's going to be possibly some penalties. I think there's going to be a lot of discouragement to move away until they eventually, right, the banking system that is loading up on Bitcoin, that is loading up on these other cryptos, they will eventually work out a deal with them to say, okay, now you've got all these people in CBDCs, we can lock them in, right, and they can create their own government bond version where there's going to be somewhat collaborating with Bitcoin, and then allow the banking system to capitalize on the people that are already locked into the CBDCs that want to get back into Bitcoin and cryptocurrencies. And that's where you're going to get hit with the premiums. That's where you're going to be paying for, for Bitcoin at high prices, because the whole time they scared you and they tried to push you out of Bitcoin when prices were low.
Yeah, and I tend to agree with that. It's going to be, hey, I'm going to try to fight it tooth and nail, and I'm sure some Bitcoin maxi somewhere will make it happen pretty quickly. I don't know. It'll be interesting to see. Hey, we got ordinals. Why can't we swap some CBDC for some Bitcoin, All right, Sin City Crypto, it seems like we're at a crossroads with decentralized finance, especially when it comes to staking. It seems like, well, clearly there's some targets on their backs right now. Clearly, there's a lot of FUD going around this entire sector. So then I went to, what's one of the most popular ETH staking protocols? It's Lido DAO. And I go to Lido DAO, they're up in this tumultuous market. They're up 7.5%. Meanwhile, Bitcoin's down. So gaining tons of Satoshis today. Is this bullish for you mentioned Aave. Is this bullish for the Lido DAOs, the Aaves, the decentralized protocols that, hey, maybe don't care about a jurisdiction, don't care about a border?
Dude, it is okay. So before this broke, there was this rumors that, hey, the U.S. is against staking, and what does that look like? Is it going to be only exchanges? Is it going to be, a tornado cash style trying to ban, where they're trying to ban a protocol? And from the sound of it so far, it seems as though it is strictly going to be on the centralized entities, and they're not going to touch DeFi at all. So if you're going to take the #1 economy globally, where 40% of the U.S. citizens have interacted with crypto, they're going to come back, they're going to FOMO back, and if they want to participate in staking, they're not allowed to do it on a centralized platform. Well, what other options do you have? Well, you're going to go DeFi, and everyone's always trying to guess, like, or predict or talk about what the next emerging market is going to be in crypto. Hey, it's going to be the NFT, it's going to be AI. You know what? What was crypto built for? It was built to streamline and make financial processes cheaper and faster, which is essentially the core of DeFi. And so for me, DeFi is going to come roaring back in the next bull run, the following bull run, the next bull run after that. It is at its core what crypto was designed to do. And if you can't interact with it on a centralized platform, well, you best believe people are going to interact with it in a decentralized platform. So an absolute victory check mark for anybody running DeFi. I know you said that some of them are down, Lido not being, but whatever it is, if you offer DeFi services and you are not privy to the SEC scrutiny because you don't have a company running the damn thing, then the future is yours, right? You just cut out half the competition. Half the competition is gone. I mean, how bullish can that be for that industry? Now, I'm not saying I'm not advocating for it, because I think a lot of users are going to be lost that wanted to use CeFi, but a lot of users aren't just going to throw their hands up and give up.
Quick
They're
follow up, Sin City. Are we pushing retail into DeFi with this latest move? You kind of said they might be a little uncomfortable. I mean, is it possible for the education to happen, or is it likely?
Yeah. So you lose some people that aren't interested in going there, but the people that are still interested in interacting, they're going to go elsewhere. And convenience is always going to reign supreme. It's always going to be the winner. You look at any technology throughout the history of mankind. If it's complicated and you don't really, and your parents don't know how to use it, it's less likely to get adopted. The more and more it becomes user friendly with a user interface, then at that point it becomes the normal. It becomes what people want to use. And so right now, DeFi staking get a little complicated. But one of my favorite projects, you look at Loopring. Loopring, not on the subject we're talking about, but Loopring offers an exchange services that have a feel that look exactly like an exchange. And so you can use a DeFi platform to get in and out of projects. It looks like an exchange. Now, what I'm looking for is a staking protocol that is easy for the novice person to use. You can, like I mentioned earlier, you can hook up your Coinbase wallet or whatever it is. You can hook right up to it, and the staking is done off chain, and it's just as simple as doing it on Coinbase or on Kraken or wherever it was. If you make it super simple, then boom.
All right, and we actually have a staking chart. I was going to show the loop ring. Actually, let's just pull up loop ring real quick. Can we share the chart?
While you do that, after you do that, I want to add something. If you don't
down 10%. So hey, if that is something that's on your radar, maybe it's an accumulation point. I mean, if you look at the all-time chart, that doesn't look like a terrible spot to jump in. Just saying there. I don't know.
Yeah.
I mean, who knows?
You know, if
Sin City likes it, I like it.
Yeah, I'm not even trying to I'm not even the biggest loop ring fan.
You said you had a giant bag of it, right?
No. For me, what draws me to that platform, and I don't know if it'll be successful. I have no idea. But what draws me to that platform is that it looks and feels like a regular exchange. You got order books. You know, it has the same functionality as Uniswap. However, it feels like an exchange. And so if you can have the same feel and look of the staking that you offer on an exchange, but yet it's decentralized, and that's a win, and that's coming.
All right. Well,
look, I want to add.
Yeah, go ahead.
Real quick,
Rice.
man, because there is no true decentralization, and there's different levels of what we call decentralization, and there are attack vectors for all of these decentralized protocols, whether it's a URL or whatever the situation might be. If it is a threat, it will be taken down. Period.
Yeah.
Look at Tornado Cash.
Yeah, that is a good point. Now, Rice, just quick follow-up. Is there any level where, Lido DAO has a lot of money locked up. There's a lot of smart people behind it, a lot of respected people in the industry behind it. I mean, is there a point where, I don't want to say too big to fail, but maybe the incentives are so high you feel better about it not being hacked or not being exploited? Is it 10 billion TVL? I mean, is there a point where, okay.
I mean, honestly, in this particular instance, I'm not qualified to give a good answer to that question. Honestly, I haven't really done enough research on the Lido protocol to really even add any value here. So, just want to be honest.
Me neither. I wouldn't know either. Although, just general advice, if I were to stake some ETH, I'd probably want to choose the biggest one, even if it meant 1%, 10% less rewards for myself. To me, it's like 20 times as likely that it won't be hacked. And so, there's going to be little.
Yeah, the more users, the more security and protocol I think is going to be implemented on these different blockchains and different offerings.
Yeah. All right. Final question of the topic: debate crypto. Feel free to just throw a Hail Mary guess here. But what do you think is going to be the blockchain besides Ethereum that is going to capture the majority of DeFi? I mean, can Solana have a resurrection? Is it Cardano since they have Zed? Is it Tron and Justin Sun's going to make it happen? And what to use the upcoming DeFi that might be number 2?
There's 2 projects that I'm looking at. I don't have one. I'm going to give you 2 answers. One would be the obvious, Cardano. Cardano is going to pick up massive amounts of DeFi here in the next bull run, right? We like Sin City was saying, we're getting rid of centralized finance through these centralized exchanges getting hit with regulations, and the uglier the regulation comes out for these centralized points, the more decentralized we're going to go, right? The more innovation is going to leave the states and leave these centralized entities, and we're going to see more towards decentralized protocols and platforms. Another thing that we're going to be seeing is privacy, right? The mixture of privacy with decentralized finance is going to push DeFi even further down the line, which is going to be necessity when we see this DeFi boom once again, because regulation is going to be coming after people, and the only way to protect yourself is going. So whoever creates privacy and decentralized, they're going to be getting a massive pump. So my number 2 pick for a blockchain that's going to pick up a lot of DeFi here, I believe is going to be Avalanche. Avalanche, partnered up with Amazon, and I think that Avalanche last bull run did pretty well for itself for being a new kidder on the block. And I think they're going to be able to produce a lot of DeFi products as well, and possibly pick up a big market share right there. So Avalanche and Cardano, the 2 ones that I'm picking up, and I'm not picking up, but I'm saying that I'm keeping an eye on for when it comes to DeFi boom the next bull cycle.
All right. Well, that is all that's great. And it looks like Sin City Crypto maybe ended up taking it home. Sin City Crypto, feel free, take us away. You too. I also have a little friend, a little birdie on my shoulder. Sin City Crypto, let us know. Leave us with some parting thoughts, please.
All right. Well, I wanted to bring my boy Larry over here. He's a Quaker Parrot.
Larry Bird.
Also got a Larry NFT. Yeah, Larry Bird. He's also got the same colors. We had a pretty good show today. We had Lifer on there, so big shout out to him. If you guys haven't checked out our live show, we bring guests on every day for the most part. We had DZ on there last week, and yeah, man, I'm excited where the market's going, man. I think the bottom's in, and even if it's not, time to buy. So thanks for having us. Go subscribe to everybody here, and shout out to Hit Squad and all you guys.
All right, and all my vampire hunters out there, make sure you keep staking. I'm still staking my Cardano, that's for sure. I know NES poll, BJ wanted to give me a shout out there. All right, that is all we have time for. Make sure you subscribe to everyone's channel here. Make sure you hit that like button while you're at it. We'll see you tomorrow.